This is an outrageous situation, especially considering the US is the supposed economic center of the world with trillions of dollars circulating in its financial system. People have their savings and a huge amount of money tied up in dollar assets, like US stocks and bonds, giving everyone exposure, directly or indirectly. The system is already structured to tax investors heavily. In 2024 alone, domestic investors paid the federal government a massive amount, resulting in $100 billion rise in receipts. Given this, the absolute minimum people expect is transparency. Basic answers on US GDP growth, employment numbers, and the potential for massive job losses. Not getting answers is like going to the only market stall, being told lobster is $100 a pound, and having no data or comparisons to know if you're being bamboozled. It's a dreadful analogy, but the US government seems to not care about doing its job. The BLS just canceled their October jobs report, citing an inability to collect some data, which is unbelievable given the collective might of the federal government. They plan to incorporate those payroll figures into the November report, creating a blackout of essential economic data for October. What's truly outrageous is the timing. The November report is now scheduled for December 16th, over a week later than planned. Imagine you're an investor allocating capital or a business owner looking to hire. Without jobs data, especially unemployment numbers, you'd be flying blind. Businesses will be afraid to hire, and investors will be split between yahoos who are hyped regardless and data-dependent people who won't pull the trigger. This creates a weird environment of fear mixed with casino betting, which can reverse fast. In 2024 and 2025, nearly $300 billion of foreign money has entered U.S. equities. This money is seeking a return in stocks because the dollar has been weakening, cycling out of bonds into U.S. equities as the new safe haven. However, stock values ultimately depend on earnings, which are dictated by the health of the economy. You can inflate a bubble, but not forever, especially if Main Street is actually turning into a Mad Max wasteland. Without the jobs data, how can we assess the economic reality? What is the BLS even doing? The government shutdown is an excuse, but it's not enough. The timing is crucial. December 16th is well after the Fed's FOMC meeting, meaning Powell and the rest of the Federal Reserve will also be flying blind. Without this data, proper decisions cannot be made. Fed funds futures are selling down, and the market increasingly believes the Fed is paralyzed. Just a few days ago, the market was split 50-50, but now 67% of the market believes the Fed lacks the guts to cut rates. If they dare to cut and inflation rebounds, we face a bigger cost of living crisis, not forgetting the potential for Trump's stimulus checks to send short-term inflation through the roof. A rate cut now would also send stocks even higher, blowing the bubble to catastrophic levels. This means bond yields and borrowing costs will remain elevated in the U.S. This is bad for the AI bubble that needs cheap borrowing, and definitely bad for small and medium businesses who are already struggling to get capital. Bankruptcies for large companies are already at record highs this year. Yet, according to Trump, the job situation is fine, and anyone who disagrees is delusional, making a mountain out of a molehill, or conjuring storms in a teacup. Trump said a lot while essentially saying nothing beyond U.S. jobs are growing and everything will be fine. But is that true? Even the sparse data we have isn't encouraging, showing an economy still struggling, exacerbated by the TDA war. The Fed's likely inability to cut rates will only put more pressure on everyone. U.S. jobless claims are trending back up, with over 230,000 people filing for unemployment, which is higher than the forecast, and 13,000 claims greater than the previous month. This hints at how horrible the real October data might be, and even if it's just incompetence, it's a terrible look for the U.S. economy and its financial markets, which are supposed to be a beacon of transparency. Why are jobs dropping and unemployment claims rising? It's due to a perfect storm hitting the U.S. In the first 10 months of 2025, 1.1 million jobs were cut from the economy, the second highest since 2009. In October alone, 33% of cuts were due to cost-cutting measures. When people buy less and products cost more, earnings drop and employees are dispensable. A whopping 20.3% of cuts are attributed to AI. Better AI models boost productivity, but also render a huge number of jobs redundant, which is one of the blowback effects of this crazy AI race. 14% of cuts are due to market and economy conditions, meaning revenue is falling because the world is buying less U.S. exports, suggesting the trade war is backfiring in real time. The jobs report going dark makes this situation even worse. How are investors supposed to make good decisions? And what if the Fed makes a policy error? From December to January, it's all hands on deck. We need to pay attention during this period, even without access to key data. Now let's discuss the AI bubble, because the US is not short of the power of hype, which is truly a superpower. It even made the big short guy Michael Burry close his fund down. Nvidia just delivered a very strong revenue forecast for Q1 next year, betting everything on the continued inflation of this AI bubble. Jensen expects $65 billion in sales in a single quarter and denies the AI industry is in a bubble, which is unsurprising since he can't say his customers are on the verge of implosion, so his words must be taken with a big pinch of salt. Could Nvidia hit its target? With hundreds of billions in recent AI deals, Jensen might be right in the short term. But the big question is the sustainability of this fantasy. Nvidia's growth and chip sales are dependent on the U.S. churning out more data centers, with almost 90% of sales being data center dependent, which means the hype train has to continue. Big tech firms like Microsoft and Meta have to spend no matter what, as there is almost no other significant source of revenue. Gaming and office use are now a tiny fraction of the business. Nvidia and other chip giants like AMD are dependent on the AI bubble for survival. The scale of this bubble and the level of musical chairs investing is mind-boggling, breathtaking, and horrifying. The mess centers around OpenAI and Nvidia today. Big tech giants buy chips from Nvidia to build data centers, and OpenAI spends hundreds of billions to buy compute power from them. Then they all invest money in each other, a messy family where money is simply sloshing around, mostly sourced from debt. Within the U.S., many things could go wrong, with higher borrowing costs being just one. Tech companies could eventually hit the wall, as there's a limit to stretching credit markets. Nvidia's revenue jump is a result of the bubble expanding, but the next 6 months remain very uncertain. However, external shocks, such as from China, could be the one to break the bubble. We know the energy constraints in the U.S., while China has abundant and cheap energy. Beyond that, let's talk about the software side. For all the AI solutions in the world, China is catching up very fast. Kimi K2 Thinking, developed by the Chinese AI company Moonshot, is ranked just behind ChatGPT 5.1. China is behind in the highest tier of AI chips, but its AI solutions are still world-class. Chinese companies are learning from DeepSig and using a lot of software workarounds to bypass the need for Blackwell chips, stringing together Huawei and Sens to accomplish the task. Is it cheaper? Yes. Is it less elegant? Yes. But the beauty is in the software, allowing them to do more for less. This is perfect for their domestic market and the global south. Multiple races are being fought simultaneously, highlighting the complexity of this AI war. The U.S. is ahead in raw technology, but Chinese AI is starting to win the cost-effective race. Currently, Chinese AI can offer a fair amount of intelligence using the least amount of output tokens, which translates to cost. The more tokens you use, the more you pay for an AI result. GPT and Gemini are top in raw intelligence. But the question everyone is struggling with is, how much intelligence do AI applications truly need? If Chinese AI is already so efficient, imagine how effective they will become once they hit Parateen chips. It could be game over. That's why the AI race is so fearsome and desperate today. The U.S. has an enormous lead and cannot give it up because there will be nothing left. This rush is pushing things to the brink. The AI money has to keep flowing, which is why Trump was asking Saudi Arabia to increase their investments to $1 trillion. Japan and Korea also have to pay up, because if they don't, this game could come to an abrupt end. But Washington is lost in the sauce, and Besson himself is lost in the twilight zone, unable to distinguish between reality and fantasy, between real deals and mere commitments. Firstly, why is Besson wearing a police jacket with an earpiece? He looks like an agent in the Matrix. It gets weirder every time. If the U.S. really does secure $20 trillion, then perhaps the AI bubble isn't a bubble and we are all negative Nancys. But something feels off, like a disturbance in the force. Let me know what you think. Why is the U.S. canceling its economic data, and is Agent Besson right about all those investments coming in? Stay safe. Be sure to smash the like button and subscribe as we navigate through these insane times.